The VA funding fee. Let's get after it. Hey, VA Nation, Jeff Newton here with National VA Loans, powered by Stride Bank, and we are bringing back Jerry.
I don't know if I went anywhere.
You know what? I know I didn't. I think we spun around, and here we are. It's funny because we just did a loan talking about VA funding fee, or a loan. We just did a video talking about VA funding fee, and then we thought, or then Jerry actually like, well, you know what? We ought to probably go through the VA funding fee. And I'm like,
right.
Brilliant idea. So
you can never go and talk about this enough, and to have people truly understand why it's there. Like, why am I getting charged this funding fee? So I was like, you know what? Let's just talk a little bit about the fee, the VA funding fee, what's it for, the different amounts, and I think you maybe even have a chart that you can kind of illustrate what they are as we go through them a little bit.
Yeah, I'm going to pull that up real fast. So
perfect.
Look at that. It looks nice and everything. All right, so the VA funding fee, and you guys can see the breakdown here. Should we go into what is the VA funding fee? Should we go into that first?
Yeah, I think, why don't we, let's talk about, because the video that we did earlier, we talked about if someone had to pay it or not pay it. So let's first just put that out there. So basically, if you are exempt from the funding fee, if you are a disabled veteran, right?
Yeah, so 10% service connected or higher.
And then this is waived. Okay, for those that aren't, there's a first time use and then a subsequent use after that. And that's kind of what the chart that you have up there, Jeff. But to your question, I think, why is this being charged? And what I tell the veterans is, look, first and foremost, this is a 100% loan. Okay, there's really not too many loans out there. I mean, the USDA loan that is backed by the United States Department of Agriculture, that is another 100% loan. But the VA loan being 100% financing with no monthly mortgage insurance, this is why there's a funding fee, right?
Correct.
So, and then the different amounts there, if you want to go into those a little bit.
Well, I think the different amounts are pretty self-explanatory. Subsequent use just means if you've had a VA loan in the past at any time, whether it was 20 years ago or 5 years ago, you're going to pay the subsequent use. So if you're purchasing a home and it's your second or third or 50th time you're using the VA loan, you may pay 3.3% unless you're putting down 5% or more, and then that subsequent use funding fee goes down. And then, of course, the VA IRRRLs, which are coming pretty prevalent right now because we're starting to see rates come down quite a little bit. So for all you VA or customers that have VA loans right now, you ought to give us a call at 855-956-4040 because rates are coming down and you can save hundreds of thousands of dollars a year. So,
and another fun acronym, right? Interest, I mean, it's like, how many R's are there on the VA IRRRL? So basically, though, for those, maybe this is the first time you've had a VA loan and you're wondering what is an IRRRL, that is the best loan out there, because that literally, I mean, there is no appraisal needed, no income verification needed. We're basically looking at your current situation and seeing if we can either lower your rate, your term, simple things like that. So at that point, it's just a half point of a funding fee instead of the subsequent use.
Correct. So, I mean, you just think about it on a $100,000 loan, it's $500 or $3,300. So that's where the IRRRL, and then again, no income qualifying, no appraisal, nothing like that. We won't get off on too far of a tangent there, but the funding fee, what it is and what it's used for is, again, 0% down loan, which, like Jerry said, there's no other 0% down loan that doesn't have a location restriction like USDA. USDA, you can only buy in certain areas.
And you have monthly insurance on that as well.
And it does have monthly insurance on it, where this
plus an upfront fee.
Plus an upfront fee, yes, where this doesn't. And the cool thing about that is, and what that allows for, you take a typical conventional loan or a conventional loan over 80% loan to value or any FHA loan, and you're going to have monthly mortgage insurance, sometimes in the 150, 200, depends on your loan amount and everything like that. But that is less buying power.
Yeah.
It is, because your debt to income ratio is higher.
And I think it's important too, this is a good spot to kind of point out, there's really two buckets of loans, right? So we have these government loans, the VA loan, an FHA loan, the USDA loan. all those loans have some sort of upfront fee. So it's not like the VA loan is different. FHA has an upfront fee, and so does the USDA.
Yes.
But the difference is both the FHA and the USDA, they'll also have a monthly mortgage insurance where the VA loan does not.
Correct.
The buckets of loans, the conventional loans, those are going to have PMI, private mortgage insurance. Those loans are the ones that go to Fannie Mae, Freddie Mac, and whatnot. And based on your down payment, you're going to have a level of monthly mortgage insurance as well, unless you're putting 20% down. So to basically be able to have a loan that there's no down payment requirement, you can. And as you showed in your chart, you get a cheaper funding fee if you start to put more money down. But to be able to have 100% financing with no monthly mortgage insurance, it's a great way to purchase that home, start to establish some equity, start to build some wealth. And there's just no better way to do it. And so that's why we like to talk about this so much.
Yeah, no, I know, man. And not only that, you still have the most competitive rates on the market for the program. You don't take hits on that. You do have more buying power because your debt to income ratio is a little bit lower because you don't have the private mortgage insurance on a monthly basis. Also, there's flexible guidelines when it comes to the debt to income ratio on VA. So there's just so many advantages to it. But I think that kind of explains what the VA funding fee is. What we will say is the reason that it's out there and the reason that the 10% service connected disabled, I love that. I've actually had a few people that they weren't veterans, obviously, but a few people like, well, I don't think it's right that, and I'm like, what do you mean it's not right? I mean,
Yeah,
they are permanently have a disability because of their service to our country. I can't, it's hard to even have that argument. So I don't even know how people do it.
One more thing, and you mentioned this earlier, but I just want to highlight it again because I had a call just the other day from a gentleman who was in the Army and he's moving up to Kansas City from Oklahoma, but his loan was paid off. I mean, I think he said 15 or so years ago. He's moving up here, grandkids are up here, and asked, would he have to pay that subsequent fee again? And he would, like you mentioned, because he had used it previous, even though he didn't have a current loan, he owned his home free and clear if he does take out another one. So I think that's important to note that, yes, if you do, whether it's 2 years or 15 years, that's when that subsequent fee comes in. But if you're doing an IRRRL, that is not considered the subsequent fee. That is the reduced rate of that 0.5.
At that 0.5.
If you haven't, veterans, if you have not looked into your mortgage, please do. This time last year, Jeff, rates are probably a point lower.
Oh yeah, at least.
If not a point and a half. So you could save a bunch of money and really, really low cost, low interest rates. So that's what we're here for. We got lots of folks that are willing to help.
Absolutely. Well, with that in mind, to contact us here, it's 855-956-4040. Any of our VA specialists, all with 20 plus years of experience, we'd be more than happy to answer any questions you have. Of course, you can check us out online at nationalvaloans.com. And if you're like Jerry and myself and you just like to get things done, hit nationalapplynow.com. Download our simple, secure Stride Home app on your Android or Apple device. Trust me, it will be the simplest thing you do all day. The application is secure. It comes directly to a VA specialist. They'll be able to reach out to you, go over all the different options that are available to you. And to stay up to date with all the current and upcoming information, check out, look at that.
No, you're going
wait, there.
There you go.
Subscribe at youtube.com/National VA Loans. And I know that Jason puts a subscribe button somewhere on this thing. So make sure to click that button, subscribe. You'll be able to stay up to date with all the current information for VA home loans and just rates in general in the market. Guys, until next time, thank you so much for your service. Thank you for what you do. Jerry, thank you for coming on and spending some time with our veterans. We appreciate it here at VA Nation. Guys, take care of yourself and God bless.